Now let's look at the charts, right? We're going to go back to the charts. We know NVIDIA has a topping tail, but I want to show you something that tells me the NASDAQ. Here's a chart of the NASDAQ. Now the NASDAQ has had a nasty run, an incredible run just over the last couple weeks, right? AI, all the AI stocks, including even ones that, are ancillary ones like Microsoft and other ones, they've been running. Apple's not that far away from an all-time high. One of the things I want to show you, and this is one of those mind-blowing things, I want to show you, so number one, let's take a look at some trend lines on the Qs. All right, so this is the QQQ, the NASDAQ 100. This houses the Googles, the Microsofts, the Metas, the Apples, the NVIDIAs, all of these, right? So what I want us to do is take a trend line from this top of the shoulder down to this shoulder here, extend it out, right? Wow, look at that. Okay, so we have a trend line that coexists right there. Now, what about this pivot area right here? Take a trend line, stretch it out. Now we hit that. Okay, now let's take another trend line right through these lows and put it right there. So again, look at this. Pivot low, right here to this pivot high. They're all three coexisting right here. Now, as if that's not even enough, check this out, guys. And this is where you get the smile on my face when you get multiple factors. Let's do a Fibonacci retrace. Many of you guys know Fib. I'm a big fan of the Fibs because anything that occurs naturally in nature, if you look again, and I've said this before, but the petals on a flower, Fibonacci sequence, the rings on a tree, Fibonacci sequence. If it occurs in nature, there's some impact on us. We are part of a bigger world. It is generally going to be important. So let's just see. What happens if we take the all-time high to the October lows? Where is that Fib retrace? Well, would you look at that? A 618 to the penny, essentially, is where we're currently trading on the NASDAQ. Now, listen, does it mean that the fact that we have four factors here, does it mean that we can't go higher? No, we could, right? Factors, and this is what I want everyone to understand. The factors of a chart are probabilities. The more factors, the higher probability. All right, now you can get probabilities to 99%, and there's still a 1% chance it doesn't work out. In the case of four factors like this, I would say there's about an 85% chance that the NASDAQ will start to correct and pull back. Now the question is it going to be a big pullback, a little pullback? What is it going to be? I would say there's a decent chance that this is the high of the bounce cycle. Okay, now I'm going to show you why, and this is going to be even more mind-blowing. All right, so I'm going to erase some of this stuff here because I need a clean chart. Actually, I don't even need that. All right, so we're going to rewind, right? We're going to take it back, and again, I just watched The Last Dance with Michael Jordan for like the third time or whatever, and I love that kind of where they go back in time. By the way, movie is great because it shows you the mindset of a pro. Now, by the way, as we're getting into this, I want to just be clear, Bybit is a sponsor of this. They are awesome, and I appreciate them being a sponsor. Make sure you check them out. They are a great exchange, great fees, low fees, all that good stuff. I just want to tell you that again on Bybit, so make sure you check them out. Okay, we're zooming back to the 2000s. Remember the dot-com bubble, all right? Look at this. Here was your high of the dot-com bubble. Occurred in 2000, that's somewhat irrelevant to what I'm saying. The first fall, we dropped about 40% on the NASDAQ 100. We then bounced 40% or 41%. All right, so you dropped 40%, you bounced 40%. Okay, so that's kind of interesting. All right, so we fell 40, we bounced 40, and then the dot-com collapse continued. We had this epic drop. Now let's go to the 2007 high. Remember the Great Recession. Here's the NASDAQ 100. It topped out in 07. Okay, again, somewhat irrelevant. We fell 25%. We bounced about 24-ish, almost 25%. Are you guys starting to see a theme here? So what we're seeing is that when you have a major top on a cycle, it tends to make a high, fall X%. So let's say you have a different cycle. It would start out here, it would drop, let's say, 20%, and then it bounces 20 before the next big rollover. And we've seen that now in 1999 to 2000 and 2001, and now again in 2007. Now, let's go here, all right? And again, I'm going to erase these lines because I want it as crystal clear, but my guess is you guys, and if you're watching me, I know you're pretty darn smart. If you're watching me here, you can probably guess what I'm just about to show you. Let's do it right now together. Here's your high. Drop it down to your low right here, right? About 40%, right? Right down here. Now let's take this low and rally up and look at where we are right now. So approximately a 38% dip to the October lows, and look at the bounce, 38% bounce. Just saying. All right, soak that in.